Happy Monday to everybody. This is Monday, October 20th, and this is your Reed Report. I'm Jay Reed, of course, your host. We're going to get right into it today. I'm not going to keep you for too long because the market's already started. Mondays and Fridays is going to be late for me. Just go ahead and throw that out there right now. You know what I'm saying? I got other obligations that I need to handle. But first, this stream is intended for educational and entertainment purposes only. I'm not a financial advisor. Make sure you consult with a financial advisor before you make any financial decisions or moves. Also, you may hear some affiliate links. There's no pressure to click on them or buy or purchase anything. Not that I'm selling anything. Just offering, ways to help me support the stream. Other than making sure you like and subscribe and hit that notification bell so you know when I go live. That's about it, man. Got that out the way. Welcome to Market Mornings, your daily rundown of the financial world in about 30 minutes we try to give you. And again, like I said, I'm your host, Jay Reed. Somebody told me I shouldn't play the music all the way through. So we're gonna go ahead and cut that out so you can just listen to my voice. I may bring it up every once in a while just to let you know it's there. But yeah, man, we're getting right into it. Quick snapshot of the market. We got S&P 500 futures are up 0.2%. The 10 years is up as well. It's coming in over 4% now. It's at 4.01. Crude oil is coming in at $57.13. The Nikkei 225 is it's a Japanese market. It hits a fresh record. It's up 3.37%, and the dollar index has a slight uptick right now. Markets are edging higher this morning, and that's with Japan leading the way after new pro-stimulus coalitions that was announced. Meanwhile, Wall Street turns its eye back on earnings. We got earnings back in the landscape right here, or just earnings are on the horizon right now. So, but before we get into the charts, of course, we want to give you about 5 things to watch for to help set the landscape of the market right now. U.S. China trade tensions. Trump highlights rare earth, soybeans, and fentanyl ahead of his renewed negotiations. Options traders are hedging for volatility around the upcoming Xi-Trump meeting. So Trump lists top demands on China, and these are his demands that he's listing before he goes into negotiation. Like we talked about last week, Trump and Xi have been hedging for this meeting, doing all kinds of things to basically throw a wrench in the other country's plans, or just to try to jockey for some leverage. But President Trump, he listed rare earths, like I said, fentanyl and soybean as the top priorities going into this meeting. And he also said he wanted China to stop with the fentanyl and to resume soybean purchases. China's not buying any soybeans. Virtually any soybeans. A lot of soybean farmers are hurting right now. A lot of them are going out of business, filing bankruptcy. We've even heard some sad stories of people not being able to take it and unaliving themselves. So just send prayers out and your thoughts out to that group, because they're hurting right now and they need some help. And he didn't want, and Trump also stated that he didn't want them to play the rare earth game with the U.S. I guess he feels that that's going a little bit too far. And the U.S. and China will hold talks later this week, as we know, in Malaysia, and that's as a fragile trade truce nears expiration, and that's on November 10th. So, and that's going to be unless it's extended. So, China's in the news this week, and it's probably going to be a China week. But we also have the CPI report incoming. Friday's inflation data could shape the Fed's next move. Markets are betting on potential pause But the data will, the data will help us. The data will be the decider. So that's something else that we're looking at. Another item in the news that you want to look at is AI meets mining. Crypto miners like Cypher Mining and Irene are providing or pivoting to the AI infrastructure and surging as results. Cypher is up 300% year to date, and Irene is up over 500% year to date. So crypto mining is coming back into the focus. Shares of large-scale computing outfits that make Bitcoin work are outperforming the original cryptocurrency. As you know, crypto's taking a little step back. We won't say it's fell. We just want to say it's taking a step back, but it's provided you, in my opinion, an investment opportunity in it. Cryptocurrency as more pivot to hybrid models built around artificial intelligence and high performance computing. A fund tracking listed mining firms, they said, it's saying that they've soared over 100%, 150% year to date. That's comparing that to, comparing that with companies such as Cypher Mining and Irene, exemplifying the trend as they pivot from pure. So people are moving away from just owning the asset into investing in these companies that mine the asset, because maybe, in my opinion, I think you'll have a little bit more time to react if there's a down, a pullback in the price. But the good thing about a pullback is it's cheaper to mine it. I won't say it's cheaper to mine it, but you get more value for mining. So when it does go up, you're going to see that benefit as well. So these may be a safer hedge right now, a safer bet right now than actually owning the actual Bitcoin. Investors are valuing Bitcoin miners for their HPC/AI, and they're also, there's AI opportunities with these, with the focus shifting from expanding hash rate, research hash rate, to utilizing energy footprint efficiency and revenue per megawatt, and earnings before interest, tax, and appreciation, margins being far higher for HPCs and AI than for mining. So pay attention to these stocks. We'll talk some of them that are up are TeraWulf. They're up 0.5%. BitDeer Technologies is down 7%. So beware of those guys. But Cypher Mining is up to 0.2% on that news. And again, we talked about China's big week, a trader's guide to China's biggest political meeting in 2025. Beijing hosts its fourth plenum. Markets are loading plenum. I don't know what that means, but markets are looking for support signals for AI, solar, and consumer sectors. That a lot of that is coming from China, and it could spark a short-term rally. If we get a stimulus in that area. If headlines provide a stimulus for that area, and just some quick notes on that. The pivotal political gathering in Beijing this week could deliver fresh policy measures to extend China's strongest equity rally in 8 years and shore up the yuan. Investors will scrutinize the post-meeting readout for any policy signals ahead of the meeting between Xi and President Xi Jinping and Donald Trump later this month. So we'll pay attention to any readouts or anything that we can get from this. What they call it a plenum. The Central Committee of the Communist Party will review main themes of the 15-year plan and its fourth plenum, with investors watching for signs on anti-involution. I don't know what, I have to look that up. I'm not that smart. Technological innovations, consuming sector, and the yuan globalization. They want to make the yuan global, like the dollar. So definitely want to pay attention to this meeting and see what comes out of it. A lot of their stocks are up right now. China Educational Group is up 3%, and semiconductors is up to 2.77. So we'll definitely watch that area. Then we have a credit cycle watch. That's kind of been the theme for at least for the end of last week. Strategists are warning of a chaotic credit down cycle. Nothing catastrophic yet, but lending standards are tightening. We mentioned that last week. The guys that aren't asking for too much to provide you credit. They're taking some losses that they can't, was it 50 million or something last week? They got duped. Zion's in another bank. 50 million is, for Bank of America, somebody like that, that's nothing. But for these private credit guys, that's a huge loss to take. Like I said, the lending standards are tightening, and bank earnings this week will show how deep the cracks go. So banks are back in the focus in this earnings season right now. So we'll continue to watch that. Anything of note, we'll bring that to you. So that's all I have for news. I think there was one other thing. We've talked about this several times on my stream. But Robinhood is banking on babies and 401k to get everyone trading. So this is why I'm, an investor in Robinhood. I don't promote anything. I'm just telling you what I do. Like I said, I'm not giving financial advice. But Robinhood stands to be, a main benefactor for kind of the trading landscape changing. Like back in the day, you didn't really know too many people that were trading or had access to to purchase stocks, but now that's changed. There, for one, due to technology is making it far easier and far more common for someone to own stocks, trade stocks, buy and sell, even day trade. Back in the day, you probably had to be on Wall Street or have like some Series 7 or 6 or 7 license to do that. Oh, that was a shout out to the kids. All you old fogies don't know what that means. But anyways, to trade, you know what I'm saying? But now everybody's doing it. I mean, everybody has stock. Everybody has access, at least has access to do it. And that's right from your whatever smartphone you like, Apple or those other guys. So I'm not saying that I'm not giving you financial advice, but Robinhood is, along with other exchanges, but Robinhood has a lot more sweat equity in the game, and they're going to benefit, in my opinion, from these millennials and baby boomers wanting to, and even the meme stocks. Like everybody's on, TikTok or something, and they're getting financial advice, or they're taking financial advice. They're taking people's streams as financial advice and making their own moves with it. So that's about all I have in the news for this week. Again, like I said, we're going to bring our a new segment I started is Reed's Playbook, and that's going to give you some offensive and defensive plays for the week. We wanted to do this on a Monday where it makes more sense. So we'll go to the charts right now. And I won't tell you what's on the move, like I said, because the market's already started right now. We'll take a look at the heat map. We're getting it looks like a mostly green, but grayish day. Some of the more green sectors are health and technology. I'll talk more about that in a second. Producer manufacturing, consumer durables, stuff like that. So, like I was saying, some offensive and defensive plays. One thing that, like I've, a couple of the articles kind of hinted to, on offense, we got AI infrastructure and more specifically the mining aspect of it. So we got Cipher mining, that's CIFR. What's going on? CIFR, Cipher mining. As you can see, they're up big pre-market, and I think, in my opinion, I think the rally continues through this week. Mining, Cipher Mining co-president Kelly Kelly Patrick authors. They sell some shares, but usually that's kind of hard to read because sometimes it's a good thing, sometimes it's a bad thing. But we do have Kelly Patrick, co-president and CEO of Cipher Mining, and 10% owner, sold 26,000 shares on the 15th for a total of about $500,000. So, but like I was saying, the price of Bitcoin fell down a little bit. And these guys, the miners, are going to benefit from that, and they're also going to benefit from the price going up. Another stock in that space is Irene Limited. They fell a little bit since the market opened, but as you can see, they rose up to the 200 EMA. I see at some point them breaking the 200 EMA and get on like a good uptrend right here, hopefully this week. Another sector we're gonna add to this to our offensive playbook is the tech and cloud area. So you have Amazon. Amazon recovered. They're recovering from a slight downtrend right here, and then of course also in that same space. And you should already have this on your playbook. This is a play you just run over and over and over again. It's like a halfback dive on 3rd and 1. Like just keep running it. Let me go back. I'm sorry. That's Nvidia. They're just, when they take these type of dips, just buy it. I mean, just buy it. That's just, I'm gonna just buy it. And then also, as we talked about last week, AMD is continuing their uptrend above the 200 EMA. They had a double top, as you can see here, but it looks like they've broken out of that, and we may get a good extension from here. I think this target is out of play at 185. But we'll continue to watch it. But it's a good offensive play, like I said, to run. Then we have the consumer rebound. As you saw, consumer durables was up. So one of the main guys we want to look at in that space is Apple. If I could spell today, Apple. Apple's up big time, pre-market, and it's continuing the run here as market goes on. And Apple's basic iPhone model surge in sales. You had the Apple Air that finally came out in China, and I think it was sold out. Right after that release, Apple's iPhone 17 launch outperformed the iPhone 16 by 14% in the first 10 days. With sales in China nearly doubling, marking a 31% increase overall. So Apple's doing their thing, and if you were able to get in when it was under the 200 EMA, undervalued in my opinion, and you're kind of reaping the benefits now. But that's it from our offensive plays. Defensive plays kind of going to be still the same as last week. Gold. We have the GC. Gold futures, gold's above 4,200, and this is as China tensions kind of tighten up. Not saying it's going to be a bad thing or anything like that, but we don't. It's uncertain, so we're everyone's kind of clinching like, hey, like I said, we're watching the plenum to see what comes out of that, to see how they're going to go into this meeting later this month. We're also going to watch some of the things that Trump does to kind of jockey for that leverage to give them the best outcome. But gold's pulled back a little bit on the open. But it's above 4,300 right now. It just continues to break. I won't say new highs. Not real familiar with the total history, but this is the highest I've seen it in my lifetime. I remember people talking about gold when I was younger, and it was $30. I'm not dating myself or anything like that, but yeah. So gold is always going to be in a good defense for anything that could happen to you. Then we have healthcare. You got Whole Logic. Hologic, it was up pre-market. It's pulled back a little bit. Probably people taking profit on that. But Hologic rises after media reports Blackstone TPG nearing a $17 billion buyout for those guys. So that's always good. Acquisition is good. Then you have Cooper. COO is a ticker. The Cooper companies, again, same thing. They're up. They were up pre-market, pulled back a little bit, and it says activist investors take stakes in this stock as well. So we always talk about healthcare as a good defense, and those are two names that I'll be following this week. And then you have, your normal utility staples as bond yields stabilize, defensive yields play. They're better than what you get in the bond. So the bond's back up over 4, but these are some good things to look at. Utilities. So you have a utilities fund. Again, probably some people taking profit. So if you're looking for a safe haven, that may be a good fund to get into. NEE, they were in my playbook last week, but Next Era Energy, same thing. They fell back a little bit. Maybe some profit takers there, but a good area to get in right at the 200 EMA. I don't see it falling below that. We got some momentum coming, and Duke Energy as well. All of these guys fell back a little bit, but good buying opportunities if you ask me. So yeah, man, I told you I was going to try to keep it short and sweet for the week. Final thoughts. We're entering an inflection point in the global markets. Like I said, we have a lot of stuff going on with China. We have between trade tensions, you got credit risk over here in the U.S., and then you have AI, the AI disruption. So expect volatility. The CPI number Friday could either light a fire under the bulls or send us into another risk off cycle where people start saying, hey, I'm not taking on any risk, and and it's not worth it anymore. So that's my final thoughts, man. Again, like I said, make sure you like and subscribe and hit that notification bell so you know when I go live. As a disclaimer, this is not financial advice. Make sure you consult with a financial advisor before you make any financial moves. And make sure you check out my affiliate links as well in the description below. Has some good items there for you. One of my best favorite partners is btcc.com, where you can leverage your crypto trade up to 500x. But make sure you do your research before you invest in any highly volatile security. And crypto is a security. So like I said, man, I'm Jay Reed, and this was your market mornings. Hit that like, that subscription. Check the description for affiliate links, and I'll see you tomorrow. Stay sharp. Peace.